This is the Clear Money Talk podcast, offering up creative solutions for your retirement future through education, choice, transparency, and empathy. Now, your host, CEO and founder of Clear Financial Partners, Tim Claremont.
Hello and welcome. Welcome to Clear Money Talk. I am your host, Tim Claremont, CEO and founder of Clear Financial Partners. As always, I am here with the amazing Tyler. Tyler.
Thank you, Tim.
You earned it. You became amazing.
Appreciate that. Yeah,
you bet. We're excited today. So today, one of the things that happened, there's always tech errors, right? Technology errors occur here and there. And we recorded a show last September that was lost. It was lost in the ether. And we were unable to recover it, unable to find it, whether it didn't get right. Maybe I didn't push the record button or something along those lines. So we're redoing that show for you today, which is frankly going to be a completely different show because we don't, pre-record or script or any of this stuff out. So just answering the same question we answered last September, but you'll get today's answer. So with that in mind, our question of the day, Tyler, is...
Take it away, Tyler. What kind of life insurance should I buy?
What kind of life insurance should I buy? So it's funny, we recorded it last September because September is actually Life Insurance Awareness Month, and you're going to get this earlier than September this year. So whether you wait for September to deal with your life insurance issues or whether you tackle those issues sooner, I hope that this motivates you to give some consideration to what happens if something happens to you, to those that you love, whether it's your spouse or your children or your grandchildren. There are a lot of purposes to acquire life insurance. And I would say ultimately the answer to the question of what kind of life insurance should I buy always comes back to what's your purpose for the life insurance. Most people, when they think about life insurance, they're thinking about, hey, I'm raising my kids. I've got kids that are young. And if something happens to me while they're young, my spouse or whoever's going to take care of my children, if something happens to me, needs money because they got to take care of the kids. And maybe you need money to also help take care of some of their education expenses. We know how expensive that can be. And maybe you're thinking of paying down or paying off the mortgage because when your income stream is gone, it might be hard to make that mortgage payment. So those are some of the thoughts that most Americans have when it comes to life insurance. But life insurance is such a complex investment tool. You can use it in a lot of other ways. So we're going to try to cover a few of those different categories. If you really like one of the strategies we'll touch on briefly today, the LIRP concept, life insurance retirement plans, we have a whole nother show about LIRPs. So you can just go check that one out. I think we aired it a couple months ago. So,
correct.
Go listen to that. This is going to be on general life insurance overall and trying to help you, get the answer to the question, what kind of life insurance should I buy? So if your focus is, let's start with that typical, parent. You're a parent and you've got young minor children. They're under the age of 10, whether it's one child or 2 or 3 or 4 or 5 or 20 kids, however many kids you got. If they're dependent on you for financial purposes, they need the money that you generate in order to feed them, clothe them, put shelter over them, educate them. Whatever your belief set is related around education and who should pay for it and undergraduate and all that, term life insurance is so inexpensive that if you're healthy enough to qualify, there's really no excuse to not having some amount of life insurance in place. The term life insurance is basically like renting. It says, hey, I'm gonna rent this life insurance for a period of, let's say, 10 years or 15 years or 20 years or even 30 years. Whatever time frame you want to rent the life insurance for, you make the payment. If you die while you're renting, then the life insurance company writes a very, very large income tax-free check to your beneficiaries. And then that money is there to help. So you start getting into the question fairly quickly of, well, how much life insurance should I have? So we say, what type of life insurance should I have? A lot of times, there's different kinds. There's permanent and temporary. Temporary is term insurance. Permanent is what you might be familiar with, like whole life insurance, universal life insurance, variable life insurance, variable universal life insurance. Those are all subcategories of permanent life insurance. But term is temporary life insurance, and it's just so inexpensive that there's really no reason not to have adequate protection there. Just touching briefly on how much life insurance, because I do think that's very personal. Everybody needs to make their own decision as it relates to the amount of life insurance.
Yeah.
There are 3 ways that we have discussed in the past in figuring out the right amount of life insurance to have for you. One method, and you just kind of pick the one that works for you.
Yeah.
One is underwrite. You can say, how much can I qualify for? most underwriters aren't going to write a $100 million policy on somebody whose income is $50,000 a year and their net worth is a few $100,000. Like they're not going to do that. You can't qualify for an unlimited amount of life insurance. You have to have a financial need, and that's one way of looking at saying, well, how much can I get? I'll just get what I can qualify for. That's one of the three strategies. I'd say it's less often used. We do use it occasionally, but it's less often used than the other two strategies. The second one is a multiple of income. I think the biggest financial loss that you're going to have if something happens to you for most families is the loss of your income stream. If you're 35 or 40 years old, for example, right now, and you were to pass away, you would have theoretically earned your income for another, 25 to 40 years of working. So however much money you make, let's say you make $100,000 a year, if you would have worked another 25 years if you hadn't passed away, well, then 25 times $100,000 would be a rough estimate of replacing the income stream you would have created. That'd be about $2.5 million. So life insurance, the free life insurance that you get through work is usually like 50 grand, or the multiple of income benefit that you get through work might be like 1 or 2 times your income, maybe 3 times your income. That's usually a good basic amount, but as soon as you lose your job or leave your job, many times that's gone. And then you have no coverage. And a lot of times people pass away, they don't pass away with their work, and something bad happens to them, then they lose their job or they leave their job and then they die, and then there's no life insurance. So having some kind of term insurance policy that follows you around, or a permanent insurance policy if you can afford it, that follows you around, make sure that your loved ones are going to be taken care of even if you change jobs. So that's good to just kind of be aware of that too.
Yep.
The third method is something we refer to by the acronym DIME.
Yes.
DIME. Tyler, you want to tell? I've been monologuing, so
it's good. It's
yeah.
the third approach is more of what we in our industry coin as a needs analysis, right? So needs analysis looks at what are all the needs of a household, not just an income, which is step number 2, but everything else, because a lot of the times it's not just our income, but there's other categories that we have to take into consideration. If someone passes away, that person and the income they were generating is now gone. So when we talk about step 3 needs analysis, we use the acronym DIME, just like a coin, and it stands for different categories. The first, the letter D, stands for death, and basically final expenses, you could say, of passing away. Those things can include funeral. Funerals can be very expensive oftentimes, and that's a big overlooked category. That can go anywhere from a couple grand to, depending on how fancy you want to go out, it can be $100,000, just, depending on what you want to do as your farewell to the world. So having money set aside to take care of that can be very powerful, especially when everyone is already mourning the loss of you as an individual, and then they're having to come up with money just to pass you off to your next experience. Having the money from the life insurance can be very powerful for that. Next category kind of goes back to the option number 2 that Tim was just talking about, is income replacement. So it's usually a multiple of income, and we're calculating that as far as the I part of the DIME acronym. Third is mortgage. So, mortgage can be a heavy lift for one income earner of a household, especially if there's children. So we have to take into consideration usually the mortgage, how much is outstanding of that outstanding principal mortgage balance. Usually having money set aside in the life insurance to pay that off can be very powerful for the surviving spouse from a cash flow perspective for them. And then the fourth category is education, which I know that you hinted on as well. Education, whether you have 1, 2, 3, 30 kids, and you have inclinations and goals to help them pay for education.
Have 30 kids, do we?
I don't think we do, not yet. But if you have 30 kids, we'd be happy to talk to you.
Yeah, that's right. Yeah, you really
That'd be a
need
fun
some
one.
life insurance if you have 30 kids. But,
yes.
I mean, if you have 1 kid, you still need life insurance. But anyway,
precisely.
Sorry, I digress. I was just visualizing that.
You're good.
So education, you were saying. So education costs.
And Tim, I know you could nerd out on education costs because you did your.
I did.
Yes.
So
maybe you can go into that because I know that you love talking about this part.
Yeah, it's so much fun. So when I was in college, I went to Whitman College out in Walla Walla, Washington, and majored in economics. I did my honors thesis in my senior year. I got to pick a topic for economics, and the topic I chose was the irreconcilability of rising costs with rising tuition. The schools would indicate that it's just costing more. That's why tuition's going up so much, because average costs of college were going up between 8 and 10% per year, and inflation was not going up at that same level. So it was not reconcilable. You couldn't say that rising costs are why tuition was increasing. It really comes down more to supply and demand. But I digress. I'm not going to go into my honors thesis experience here. The whole point was that education's expensive.
Yes.
And if you look at a 4-year education experience, you're looking at typically anywhere from 40 to 100 grand a year, and you multiply that by 4 or 5 years, $160,000 to $500,000 per kid is a lot of money to pay for college. And whether they go to a 4-year college experience or go on to postgraduate work like doctors and lawyers and other kinds of grad school opportunities, or go through a community college experience or vocational training, there's no doubt that educational expenses are likely to be a part of your children's future. We don't know how much it's going to be, but if you're not there to help, then it certainly would be nice if there was a little extra money from the life insurance. So yeah, that needs-based analysis approach Tyler's talking about, spot on. So D, final expenses, I, income replacement, M, mortgage, and E, education. I think DIME actually came from one of my clients. He told me about it when I first started in the business. Couple few years in. I was saying, hey, how have you? Because he was in the insurance industry and he worked with us as helping. We helped him take care of his retirement income planning, and he used to work with life insurance a long time ago, and they taught him that. I think it was like in the 50s that they taught him this DIME acronym. And back then, it probably cost a dime for your life insurance. So it was that's probably where it came from. But
totally.
Now I just use it to remember those four basic aspects of how to figure out how much insurance might make sense.
Yeah, it's a great way to visualize it. And you basically take all those things, you total them up, gives you a rough idea of how much life insurance you should have on yourself, and then something happens to you.
That's right. Yeah. I mean, I can't remember the last time we wrote policies below $1 million. Most people need at least $1 to $3 million of life insurance. And term insurance, like I said, is so inexpensive that there's really no excuse to not having adequate protection. There are, however, other kinds of policies. A lot of people don't enjoy renting. They want to build equity in their property. So when you buy a house, for example, you're building equity in your house. You're making payments, and eventually over time, you own the house. You still have to pay property taxes and insurance on it, but you still don't have to pay a mortgage anymore. You own the house. The same thing can work with life insurance. Rather than renting your life insurance and getting evicted at the end of 10 or 20 or 30 years, presumably after you're alive and haven't died, which is the better result, by the way.
Yes.
So, permanent life insurance is different. You buy that, and you keep making the payments, and when you die, whether it's tomorrow or whether it's at 120 years old, they'll pay the money on to your family. And with that kind of a policy, the death benefit's eventually going to get paid out. It's not just if you die in the next 10 years or 20 years or 30 years, but it's when you die. We haven't figured out how to solve death yet. It's not resolved. Hopefully we'll figure that out in my lifetime. That'd be kind of cool.
That'd be neat.
Yeah. That'd be neat. But in the meantime, for those of you that are dealing with the pragmatic realism of the rest of all human history, and that death is an inevitable conclusion of our lifetime, it would be nice if there was a check at the end for the people that we love that are still here when we're gone. And a permanent life insurance policy can make sure that happens. Mm-hmm. There are a bunch of different kinds of permanent life insurance: whole life, universal life, variable life, like index universal life, like I was talking about before.
Yeah.
All of those differences deal primarily with how is the cash value, that equity, invested while it's sitting in this bucket of money waiting to pay for the life insurance as you get older. And whole life or universal life are typically paying CD-like rates of returns. Mm-hmm. Variable life, anything with the word variable in it, variable life, variable universal life insurance, typically is invested in the stock market, like mutual funds and stocks and bonds, things like that. So you can get a higher rate of return potentially, but you have higher risk on the actual investment.
Yes.
And then indexed universal life is what we use most commonly nowadays, which is kind of a hybrid of the two. It's got a floor of 0, so if the stock market goes down, it doesn't go down on your cash value. But it also has a ceiling, so when the market goes up, it's not going to get an unlimited rate of return. It's going to hit a ceiling or a cap, and there are various crediting strategies there too. But the most important thing when you're thinking about life insurance is first, there's no excuse to not having it unless you can't qualify for it. If you can't qualify for it, that's unfortunate, and you'll need to have a good plan in place for what happens, because you do have to qualify physically to get life insurance. But if you're healthy enough to get it, and you have a need to, and you love anyone at all, there's likely to be some money that you're going to want to have left behind. If something happens to you, they're probably relying on you, and that's why there's really not a good excuse to not have at least term life insurance, at least protect your loved ones in that way.
Yeah.
But the permanent policies, we work with them all the time. They can be excellent tools to build some equity, and you can use that equity for all kinds of different things later, including even deciding if you don't want life insurance in your 60s or 70s for some reason, you can cash out those permanent policies and use that equity to help you in retirement or help you with whatever ideas, other ideas you might have.
Yeah. That kind of segues to that other podcast that we done recently, was what is a LIRP, Life Insurance Retirement Plan. Using that equity to not only cover yourself if something happens to you prematurely, there's a tax-free death benefit paid out to your beneficiaries, but also has a living benefit. So everyone's like, I don't want to pay for insurance, whether it's car insurance, homeowners insurance, anything, because it's only there if something terrible happens, and you don't want that terrible thing to happen. You're like, I'm just not going to pay for that thing. Same thing with life insurance. That's obviously, the pessimistic view people have is like, well, I don't want to pay for something I'm never going to reap the benefits of. Well, with a LIRP, you can actually reap the benefits of that. It's called a living benefit, where you can actually access that equity for yourself as a supplemental retirement income stream, and use it yourself, opposed to not ever being able to see any benefits out of it. So it's kind of a fun thing to talk about with people, because they're like, wow, I never thought life insurance could be used in such a way. And it's more of an advanced strategy. So you definitely want to, understand the pros and cons of everything, and especially with this stuff. But we do it all the time.
Yeah.
And it can be a very powerful tool, done correctly.
It's just like any tool. I mean, if you have a toolbox and you got a screwdriver and a hammer and, maybe a crescent wrench or something like that, life insurance is almost like that Swiss Army knife tool, because there's so many things you can do with it. You just got to make sure you're using it correctly. If you pop out the corkscrew inside of your Swiss Army knife and try to screw in a Phillips head screw with it, it's not going to work. Same thing can happen with life insurance. If you buy the wrong policy and use it for the wrong purpose, you're going to get frustrated. And it's not because there's something wrong with the Swiss Army knife. The Swiss Army knife's fine. It's all about how you use it. And in this case, that's the way life insurance can work. So, make sure that you're acquiring the right type of tool for the purpose you're using it for, and you'll be very pleased if you structure that correctly. So
that's well said.
Yeah, it's just an important thing. They say if a picture's worth 1,000 words, and a good analogy is worth 1,000 pictures. So
that's right.
Hopefully the analogy sticks with you.
That's great.
You can't. It's almost like, if I think about it, if you run into a pole. You run into a pole or hit your head on a door or something like that, you can get mad at the pole or get mad at the door all you want, but at the end of the day, we know what happened, right?
Yeah.
You weren't paying attention to where you went. You ran into the inanimate object. Life insurance is an inanimate object, just like that door or just like that pole, and you got to use it correctly. Without the door, you wouldn't be able to walk through walls. I mean, that's pretty sick. You can walk through walls with a door. We take that for granted all the time. Without the pole, you wouldn't have lights, in the air 25 feet above us, lighting up the street that we walk down. Life insurance is pretty cool, but if you walk into the pole or walk into the door and hurt your head, that's not the door's fault. So make sure you have the right kind of life insurance. Make sure you're using it for the right purpose. And if you don't have it and you're just using the excuse of, I don't want to spend money on that, or I'm not going to benefit from it because I'm too afraid. Life insurance is only for these bad things that happen, like auto accidents, and it's not the case with life insurance. It's much more complicated than that. So
it is. Looping back around to the question, what kind of life insurance should I buy? Who do you think's the ideal candidate for a term, for a permanent policy?
Yeah.
Maybe for a LIRP. Mm-hmm. And how do we think this fits best into our listeners? What they're like, Tim, I know I need life insurance. What should I buy?
Right.
And it's hard to give a recommendation. We don't know you. We don't know your situation. However, generally speaking.
Yeah, that's right. I think I can give you some generalities. It's worth giving some
And this might be a good
to.
just the answer, too, for us to loop back on.
I agree. For those of you that are trying to get just the answer in that 2 or 3 minutes to just get the answer, and you don't want to listen to us banter back and forth, and go on.
Feel sorry for you if you don't want to listen to our banter.
I know you're missing out on all the good rabbit holes we normally dive down.
Yeah.
Okay, so just the answer. What type of life insurance should I buy? So if you're young and healthy and you can qualify for life insurance, and you are raising anybody, or anybody depends on your income or your money, then you should probably get it at a minimum. You should get the adequate amount of life insurance. That's the most important thing first. Figure out how much it is and go with the cheapest kind you can get, at least as a starting point. That's term insurance. Mm-hmm. You can look at 10, 20, 30-year term insurance based on how old you are. Make sure it's going to last beyond the point where you see an immediate financial need. If it's your kids, for example, and they're 5 years old and they're going to go to college at 25, a 20-year term policy might work okay, because that'll take them all the way through presumably 4 years of college, and that's the cheapest way to get some basic level of coverage. If, however, you see yourself having a need for life insurance later in your 60s, 70s, 80s, which, by the way, your spouse If you're relying on Social Security as a primary source of retirement or a very significant source of your retirement, when one of you passes away, the lower of the two Social Securities goes away. So that's a huge income tax, an income loss for your spouse. So keep in mind, your need for life insurance may go beyond your children going off to school. You know, your spouse, you may have a need for life insurance in your 60s, 70s, 80s, 90s to replace the income that'll be lost, because not only does that income stream go away if one of you passes away, but you also get taxed worse because you're now single instead of married. And your tax bill can actually go up even though your income goes down, which feels very counterintuitive, but it'd be very tough for our widows and widowers that are dealing with that kind of a scenario later. So if you have a need for life insurance that goes beyond the next 20 or 30 years, you need to look at permanent life insurance options. So the answer on that, use a permanent policy. Consider your own risk tolerance. If you can handle the stock market, you can look at variable life products. If you want something that's just guaranteed, simple, straightforward, whole life or universal life can work for you. And if you can understand it and the flexible, way that the products exist, indexed universal life is definitely worth considering. I wouldn't make a permanent life insurance decision without talking to an insurance professional because it doesn't cost you anymore. You're going to pay the same amount of money anyway if you buy the life insurance direct from an insurance company or a website. There's no additional fee to purchase life insurance through an insurance professional. So they get paid anyway, whether you use them or not. So you might as well use them. It's just the nature of how these things work.
Yeah.
We are experts in life insurance. Obviously, we'd be happy to help you with that if that's something that you want to take care of. And I think that's pretty good for just the answer. Other than, of course, the last one, as far as if you make enough money that you're maxing out your retirement accounts, your 401ks, stuff like that. Listen to our LIRP podcast, our Life Insurance Retirement Plan podcast. That is definitely worth giving consideration to produce a supplemental tax-free income stream in your retirement years. And if you had to slow this audio down, I apologize.
Listen to it twice, I guess.
Yeah, there you go. That's another
one. That was good. Just the answer was good.
All right. Kept it tight. Tried to keep it tight.
And if there's anything that we didn't answer, because we try to keep these tight, or you have additional questions, just give us a call. 503-579-1000. We'd be happy to review your existing life insurance. If you have no life insurance, we'd be happy to review your situation to see if life insurance makes sense for you. Usually with life insurance, there's a decent amount of analysis and research that has to go into it. And I'm not trying to puff us up as these, doing so much, but there's a lot that goes into it beyond just, let me just buy a policy and be done with it. You want to make
life insurance analysis of your existing life insurance portfolio is a thing. You may have multiple policies, various acquisition dates, various strategies, various amounts of cash value. You might have taken loans against them. All of those kinds of aspects add to the complexity of your life insurance portfolio, and reviewing that to make sure it's doing what you want it to do is one of the things that we absolutely handle for our clients. So
100%. Yeah. You ready for some trivia?
Pivot to the lighter topics.
Yeah, it's definitely lighter. I wouldn't say it's more fun. I mean, I have fun talking about life insurance and just riffing with you, but the trivia is cool.
All right, time to stump the nerd.
I'm covering the answers just in case you're sneaking at my notes here.
Anyway, I don't have my glasses on.
You don't cheat anyways. You're pretty by the book with that.
I couldn't cheat. I would never even peek at my Christmas presents. If I had a feeling that the Christmas present shape might give me an indication as to what it is, I would intentionally not look at it because I had to open it on Christmas.
That doesn't surprise me.
Kind of the way it went. So, or wherever you're. Anyway, that's just the nature of. That was.
No, that's a good quality to have.
Is what it is. So there's no cheating. No cheating from this guy.
Nope. Okay. What we ready? We got riddles.
Okay. Riddles. This sounds fun.
Yeah. We got riddles. Right. I'm trying to keep it fresh. Keep it funky.
Yeah, keep it. All right.
Okay. Good. Are you ready?
Yep. Hit me.
Here we go. I have keys but no lock. I have space but no room. You can enter, but you can't go inside. What am I? And I can read that back to you if you'd like.
I have keys, but no lock. I have space, but no room. You can enter, but can't go inside.
Correct. What am I?
Oh, hang on. I think I almost have it. Your keyboard.
You are a keyboard. Nice work.
Nice. I was like, first I'm like, is it a piano? I'm like, no, because you have keys.
Okay.
But I was like, no, but you don't enter. It says there's no space, but no lines. Like, you're a keyboard.
Good work.
Nice. That was solid.
That was a fun one.
That was a fun one.
Do you want one more?
Yeah, give me.
You got another one. You got that so quick. We got to give you one.
All right. We'll see.
Okay.
Sorry, my brain was just spit. I didn't verbalize the experience out loud the way I usually do. So I'll see if I can do that better this time.
Yeah. Well, this one might be a slam dunk for you too.
Well, all right. We'll see.
Okay. There are two ducks in front of a duck, two ducks behind a duck, and a duck in the middle.
There are 2 ducks.
How many ducks are there?
There's the 2 ducks in front of a duck.
Uh-huh.
There's a duck behind a duck.
2 ducks behind a duck.
2 ducks behind a duck.
And a duck in the middle.
And a duck in the middle.
And we are saying duck, the animal.
Uh-huh.
How many ducks are there?
Well, I mean, there might be another way to do it, but I mean, I'm in a basic, simplistic aspect, I'm getting 5. I mean, it could be 4, but let's see. 2 ducks in front of a duck.
Mm-hmm.
Okay.
2 ducks behind a duck.
2 ducks behind a duck.
Duck in the middle.
Duck in the middle.
How many ducks are there?
Yeah, it could.
Listeners,
actually,
if you know the answer,
I think
just yell it at your phone or whatever you're listening on.
I guess I could see 4 if you positioned them in a triangle and it had 1 duck in the middle of the triangle, and depending on how you turn it. But I don't know. 5, I could see it as 4 or 5 in formation. I'm just visualizing it. But at the end of the day, I feel like it's a riddle, and that there's going to be something stupid like there's no ducks, or I don't know.
There's just 5 squirrels.
Yeah, that's right. You got me stumped right now. This usually a riddle has that solve moment where you're like, when you get it, you're like, oh, I got it. I'm not feeling that right now. So
Okay.
So I'm just.
Do you want the answer?
Yeah, I'll just say 5.
There's 3 ducks.
3 ducks.
Yeah, just in a row.
Oh.
2 ducks in front of a duck. 2 ducks behind a duck in the middle.
That makes sense.
They didn't say the order.
You're right.
Yeah.
Oh, see, I had them side by side in my head. That's just messed it all up.
Yeah, I do the same thing with
That's
myself.
good.
on
Well,
this.
that's solid. Three ducks.
Very
That's good.
fun.
Well, whether that stumped you or whether you were like, Tim, you're an idiot for like the last 30 seconds while I'm sitting here puzzling through I was thinking of pips on a dice. When you roll the dice and you see the 5 come up, I was visualizing that formation.
Got
and
it.
trying to shrink from 5 to something smaller, and I got to 4, but I didn't know how to get to 3. I should have got to 3. That's dumb. So
That's all right. There's
what
always
it is.
next week.
It is what it is. All right. Keyboard's a win. Ducks a loss.
Yep.
Oh, and that brings us to the end of our show
That
today.
brings us to a good closure.
Final words of wisdom or thoughts, Tyler? Anything you want to share on the topic of today?
No, I think as my words of wisdom are, people don't plan to fail, they fail to plan.
Oh, yep.
So
Solid.
if you feel like you've been neglecting something in your financial plan, whether it's life insurance, whether it's your asset allocation, your retirement funds, anything, give us a call. Reach out to somebody you trust. If you already have an existing relationship, that's great. We're not in the business to replace those. Just reach out to them and give yourself the peace of mind knowing that you asked the questions, you figured it out, and you can put it behind you. That's
that's
my
good.
words of wisdom.
If you don't have somebody or you don't like who you have,
That too. If you hate who you're with, give us a call.
503-579-1000 is our phone number. I realize we should probably say that more.
Yeah,
we're
we should.
not doing a very good job of self-promoting.
What
over
if I
and
get
over
a
again.
tattoo on my forehead?
Oh, that would be cool, but only if you put our C logo on it too. So,
Okay, yeah. Trademark, all that.
All right, thank you so much for your time today. I hope you enjoyed Clear Money Talk, and we look forward to sharing insights and wisdom with you in the future as well. Have a good one.
Till next time.
Investment advisory services are offered through Clear FP Advisors, LLC, or Registered Investment Advisor. Securities are offered through Clear FP Securities, LLC, member of FINRA IPC. Exposure to ideas and financial vehicles discussed should not be considered investment advice or a recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments may fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Timothy Claremont is licensed in your state, please contact his office. Clear FP Advisors, Clear FP Securities, and Clear FP Life LLC are not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide tax and/or legal advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Clear FP, LLC NPN number 194283777 and or Clear FP Securities NPN number 197499604. Any discussion of general investing strategies or specific securities are for conversational purposes only and should not be taken as a guaranteed endorsement or recommendation.